to a level of 230.654. And for the month, the index is seasonally adjusted there. The consumer price index for urban wage earners and clerical workers decreased 0.3% over the last 12 months to an index level of 233.806. And for the month, the index was essentially unchanged. The chained consumer price index for all urban consumers decreased 0.1% over the past 12 months. For the month, the index was virtually unchanged. So we were able to find some information there. Now let's move on to this, and you'll hear a little discussion from Goldman Sachs. Their whole idea of $20 a barrel is possible. Goldman Sachs trimmed its forecast. This is West Texas to $45 a barrel. Pretty consistent there. The global surplus of oil bigger than the Sachs Group thought, and that the price is could be driven down as low as $20 a barrel. But this was given with a large caveat. Now, from the International Energy Agency, predicted crude oil stockpiles will diminish in the second half of the year as supply outside of OPEC declines the most since 1992. The oil market is oversupplied, is even more oversupplied than we expected, and we forecast a surplus to persist into 2016. No doubt about that. All nations are pumping what they can pump. Goldman trimmed its estimate for West Texas to $45 a barrel for May. The projection there was at 57, very unrealistic. Resilience of supplies from outside groups and slowing will prolong the glut. The bank also reduced its 2016 Brent crude to roughly $50 from $62 there. Pessimism deepens. The non-OPEC group is the group, no doubt, to watch, and they are producing as much as they can produce. The International Energy Agency, oil exporting nations will fall 500,000 barrels a day to 57.7 million in 16. The shale oil producers in the U.S. will drop 385,000 barrels a day next year as crude oil prices below 500 slams the brake on growth there. And those things have been changing, but one thing to always note, that given these changes, normalization occurs. In other words, if the benchmark is, say, $45 per barrel of an oil product, whether it be mid-Texas or the North Atlantic Brent crude, the whole market adjusts to that, and the oil-producing nations adjust to that. And of course, the U.S. pumps 9.14 million barrels of oil last week, as according to data from the Energy Information Administration. This week it cut its 2015 output forecast by 1.5% to 9.22 million barrels a day. Production this year is still projected to be the highest since 1972. And also energy consumption is much higher today than in 1972. Given the global demand, given that more people are driving cars, etc. Now, on the other side, in the U.S., much of the heavy industry that used to be here is no longer here. In steel and in various industries of that, switching from coal to, say, natural gas, that is a switch over, but that does not necessarily mean a fall. Saudi Arabia, Iraq, and Iran will supply growth from OPEC. The group supplies about 40% of the world's crude supply. And let me just get to more information here. Now, this is CNBC. U.S. oil settles down $1.29, or 2.8% at we'll give these numbers in a minute here. But more speculation out here and about Goldman's forecast. Energy firms cut the oil rigs for the second week in a row. The latest price declines are causing some rigs to go. Drillers removed 10 rigs in the week of September 11, bringing the total down count to 652. Oil service company Baker Hughes said in its closing report, this time last year drillers were operating 1,592 rigs. Energy company removed 13 rigs. That's really not very many rigs out there. I mean, as far as the removal is concerned. I first thought there was a typo here when we were looking at this about, this was last night, but about 3 days ago. We usually look at companies like Baker Hughes to see exactly where the rig count is. And here's a summary here. And this is Baker Hughes. This is the 11th of September. The rig count is at 848, and that is a minus 16 there in the U.S. In Canada, it is at 185. It's a negative 2 there. And if we look at September the 4th, they had 1,083, and in Canada 220. Baker Hughes issued a rotary rig count as a service to the petroleum industry since 1944, when Hughes Tool Company began a weekly count of U.S. and Canadian drilling. The Hughes rig count are important business barometers for the drilling industry and its suppliers. And rig data, the working rig location data is by rig data. And we'll add this. What we're doing is consolidating a lot of our data sources together, and we will in the coming weeks have things much more consolidated. But this is the rig count, and this is from the International Energy Agency. The latest tumble in oil prices, which hit a 6-year low in August, expected to cut non-OPEC supplies in 2016 by roughly 0.5 million barrels per day, the biggest decline in more than 2 decades. The lower output in the U.S., Russia, and the North Sea, that's Brent crude there, is expected to drop overall non-OPEC production to 57.7 million barrels there. U.S. light driver of U.S. growth is forecast to shrink 0.4 million next year. OPEC crude supply fell by 220,000, per barrels per day, and in August to 31,000, roughly 31,000 barrels per day, led by Saudi Arabia, Iraq, and Angola. The group output stood at 1.2 million barrels earlier this year. The call for OPEC climbed to 31.3 million barrels there, and in 2016 up 1.6 million barrels year over year there. Global demand is expected to climb to a 5-year high. And this is the other side of the Goldman forecast of 1.7 million barrels in 2015 before moderating to 1.4 million in 2016 thanks to lower prices. Inventory swelled by a further 18 million barrels in July to a record at 2.93 million. There, robust refinery throughput pushing crude oil stocks at 9.9 million barrels lower, while refined product added 26.7 million barrels there. Oil refinery throughput reached a seasonal peak of 80 million barrels per day there in August before the autumn turnaround that are cutting runs through October. Refinery margins remain robust, and that's the key right there. These their margins are still up with strong shifting from gasoline to middle distilleries as refiners gear up for the heating season. The September oil market report, we don't get it, but it also features a detailed analysis there, and that is one of the things you have to buy from the International Energy Agency. Now let's go now to the BBC, and hopefully we can find the BBC without too much difficulty here. We had it up earlier. Well, we're just going to have to get it up again so we can actually do the numbers and look at a few other little things here. We've already pretty much exhausted where China is, and we want to attempt to go back to China and exactly with the Chinese economy. Oops. The BBC's new menu has been causing us some difficulty for a long time, dealing with exactly how they have set up their new menu is not the easiest to ascertain. And many of these services also, the business part is hidden more than it was at one time. Whether this is a de-emphasis or not is very, very hard for us to pull out much of the time. And no doubt the new version, we see it all over the place, of the BBC, and we'll get to our final, just a minute here, our final report segment. And across Europe, actually, the problem with immigrants, that is a major problem for the BBC, and we finally find the business. They need to rework this menu. Signs of economic slowdown in China, and we'll spend a little bit of time on this. We talked about factory output growing at 6.1% for the year before the forecast there, and 25-year low last week. The Chinese Prime Minister said China remains on track to meet its economic targets for the year despite the economic data. They've cut interest rates 5 times there in China. China's industrial economy is dominated by 111. I think we talked about that. Industries are there. Now we'll get to the rest of business in this very, very strange makeup that the BBC has given. Well, to Coburn, mixed business reaction. I guess we'll report that. Received mixed reaction there. The British He plans to boost infrastructure investment, was welcomed by the